Mohit Gang, co-founder and CEO of Moneyfront, joins us this morning. Good morning, Mohit. Pleasure having you here with us back on News 9. Let's just look at the charts this morning and begin perhaps first with the IT sector and India's IT sector. In fact, the Nifty IT has faced the worst weekly drop since March 2020. That is last week I'm talking about, with very weak FY27 guidance and, of course, AI headwinds. What do you make of the IT sector and what are we seeing on the charts today? Is this some sort of a bottom fishing that is visible on the stock prices?
Hi Karthik, morning. Always a pleasure to be on your show. Look, I think bottom fishing is for brave-hearted. To be very honest, I think IT in India is really struggling to cope up with the global pressures, cope up with the global AI giant and the overall AI tsunami which is sweeping the globe. Till such time that you find resemblance of the IT stocks settling with the new world model, I think it's very difficult to take a call. Yes, technically you can say that they have corrected a lot, and perhaps, as I said, the brave-hearted could just do some bottom fishing, could dip a little bit, kind of. Touch your toe and feel the depth, right? But you can't get into the ocean with both your feet, right? Because you never know where the bottom is, given the new equilibrium which is sweeping the world. You never know what will be the earnings like 2 years, 3 years down the line. IT is the biggest employment sector in the country. Almost 8 million odd people dependent on IT services. So it's not just IT per se, it's the cascading effect. In terms of the earning power or the purchasing power of these 8 million odd people getting eroded, the impact on real estate, the impact on lifestyle segments, consumption, so on and so forth. So there are many other things which are the second order impact of this IT thing, right? So my sense is we should just wait for the things to settle down. Unless IT index per se gives you a meaningful bounce of around 5-10 odd% and kind of stabilizes at that level, that's when you can start looking at it. Also, I think the interest rate scenario globally is not a favorable thing for the IT pack itself. Whenever you see the interest rate scenario is in a rising cycle or in an up cycle, the IT stocks don't fare well. And till about 6 months back, the scenario was that the interest rate scenario will ease off. But given the West Asia conflict and the energy prices going up globally, I don't think so. The interest rates are coming down in a hurry now. In fact, they might just not come down but go up, right? So that also doesn't go well with the entire IT pack. So my sense is it's a wait and watch still. Yes, these are very attractive and tempting levels given the cash which sits on the balance sheets of most of these IT companies, but the results have not been encouraging. Plus the headwinds are not very encouraging. So my sense is to stay on the shores, dip your toe if you really are brave-hearted. But as of now, it's not the time to take a full dip in this.
All right. And on a day like this, where there is some sort of a rise that we are seeing in IT stocks, would you also suggest that in case people are sitting on profits, this might be the time to use the opportunity and get out of IT stocks?
Look, you will be sitting on profits only if you are like a 5-year-old investor or a
Yeah.
or a decade-old investor, Karthik.
Yeah.
Honestly, at that point in time, if you really want to shave something off, perhaps yes, maybe you can. But my sense is taking off at these levels also doesn't make sense. I see technically the sector is facing strong amount of or the index is facing strong amount of what do you say, support at these levels. So I would still wait and watch it out. I'll not sell at these levels if I'm
All right,
holding.
all right. So wait and watch seems to be the word. Meanwhile, let's move on now to Reliance Industries, which did report on Friday a 9% drop in Q4 net profit and has announced a dividend of 6 rupees per share. No concrete news really on the Jio IPO, though there was a line that mentioned that the work is on and is underway for Jio IPO soon. So overall, what do you make of Reliance Industries? Also, one would have expected that this drop in profit would have eaten into the valuations this morning, but in fact, we are seeing, Reliance has come a little in the negative this morning, but otherwise we were seeing Reliance did start off the day, not with, it started flat, not really with losses, but we are seeing some cuts coming in right now.
Right. So look, I think the weak energy margins have had its impact, and I think which was pretty well known by the street. So it's not something which wasn't known by the street that the weak energy margins would kind of have an impact. Plus, there are ongoing cost pressures, right? So it's all negatively impacted the overall profitability of the company. But I think the given the other pieces, if you see the other income and all those things, I think they pretty much cover up for the revenue part. In fact, the revenues are up if I'm not wrong, right? So my sense is street continues to believe that this is a stock where a lot of value will unlock over a period of time, and because of obviously the geo listing and so on and so forth. So my sense is, yes, it's a stock which hasn't delivered much of late, but for holders of the stock and for believers of the stock, I think there's a lot to be unlocked in terms of the parts and pieces of the overall company.
All right, and let's move on now to Adani Energy Solutions, another stock in focus this morning. 22,000 crore rupees of capex announced for FY27, but we are seeing the stock is actually down by more than 1% or so in trade this morning. Investors not very bullish on that additional capex of 22,000 crore rupees, and also we are seeing in line with that, Adani Green is also down about 1.8%. Could this be the fact that the US is looking at adding that 123% anti-dumping duty on India's renewable exports to the US?
Perhaps, Karthik, I don't have a very concrete view on this pack. Honestly, I think there are a lot of things which kind of impact the overall prices on the overall Adani Group. It's sometimes more political and sometimes more fundamental, right? So, from a fundamental point of view, I think the stocks look pretty decent and pretty good to go. Plus minus here and there because of some news. Yes, I think that can happen at any point in time, but investors just have to be beware of the overall implications in terms of that these are also politically sensitive stocks.
Politically sensitive stocks as well. Meanwhile, let's move on now to Paytm. 197 communications shares are under pressure following RBI's cancellation of the payments bank license. Of course, this story has been on for a little over 2 years or so now, but finally, the fact that that Paytm's payment bank license stands cancelled. Is this pretty much a closure of all that we have seen over the last 2 years, and it's time for 197 Communication to now potentially focus on other revenue streams and just forget about the payment bank business as a whole?
Oh, I think yes. I think it's been a long going saga, and again, there's nothing much which the market wasn't aware of. But yes, maybe there was a lot of capital which is still lying locked in the payments bank, and potentially how does that capital come out? And obviously, it was also contributing a lot to the overall EBITDA numbers of Paytm when it was functional. But now there is a complete permanent lid on the chapter. So it's for Paytm now to turn the new leaf and move forward with whatever parts and pieces they're left out with.
All right. And finally, let's move on also to Sun Pharma, which has signed a definitive agreement to buy the US-listed Organon for $12 billion. And the stock, of course, is performing reasonably well this morning. In fact, it was up about 5% or so in trade. Overall, how do you see the pharma sector, and particularly Sun Pharma? This stock, continues to outperform at least its peers and is up about 3.5% or so in trade this morning.
Karthik, I think that's a pretty audacious move which the company has taken. Honestly, I think it's sometimes about the audacity of your ambition, and Sun Pharma going out in US acquiring an equally powerful and an equally big company, right? So there is nothing much give or take between the two companies. Even in terms of operations, if you see, I think Organon operates in much larger global footprint than what Sun Pharma also does. So it'll be a difficult integration, honestly, because it's a marriage of equals. Number two, they will have to take CCI approvals in multiple countries to be really operational, and then there are those integration issues which are very well known, right? But Sun Pharma has a track record of going out acquiring companies and successfully integrating them within their ecosystem. So hopefully, this time around, it's a pretty large one, but. Given their track record around execution, we're pretty hopeful. This should be EPS accretive in the long run. In the immediate, again, as I said, these are very difficult calls to take in terms of how long does this take, what is the overall cost impact, and so on and so forth, and plus the people impact and the HR impact of this entire thing. Those are very difficult things to measure, but in the long run, it's EPS accretive, and will open up a lot of possibilities for Sun Pharma and multiple other sectors also, especially around biosimilars and those kind of things, right? On the overall pharma pack, Karthik, we remain extremely bullish and positive. I think that's one stage, one sector which is seeing action galore, right? If you see the maximum amount of PE activity, the maximum amount of capex building is happening in that sector. In fact, if you see the overall, the broader sector, which is the healthcare, diagnostics, hospitals, and all those kind of things, they have seen a big fillip. A lot of capex has gone into hospital chains and other things, which my sense is will the companies will reap benefit in the coming in this year and coming next year. Overall, the pharma space is one to watch out for, and we remain positively bullish on that.
All right, positively bullish on the pharma space. Now, away from stock-specific analysis, let's move on to what really is happening in the world, the issues which investors are grappling with. And in that context, Mohit, where do you see, the markets heading, not just by the end of this quarter, but maybe this calendar year, if not the financial year? Because right now, of course, the stalemate in West Asia continues. Crude continues to be above that $106 a barrel. The Indian rupee, despite all that the RBI has tried to do, is continuing to weaken against the US dollar. In fact, it's down to about 94.20 against the USD. Of course, there are fears about inflation coming and hitting Indian shores as well. And this is going to be supply side imported inflation. And then, of course, the massive outflows on account of FIIs. In fact, some estimates suggest that as much as 1.75 lakh crore rupees have exited Indian equities as far as FIIs are concerned in 2026 alone. So given the overall geo-economic sort of political landscape, as well as everything that we're seeing with the energy markets, where do you realistically see markets headed from here on?
Karthik, truth be told, it's very difficult to call out if markets will be heading anywhere at all. Look, I think you've put out all the numbers out there, which doesn't augur for a very good story on the Indian markets. Look, immediate triggers to me, if I were to call, other than what you have already put out, is the result of the assembly election on 4th of May. In fact, I think 29th is the last day of polling, and exit polls will give you some amount of picture. My sense is, if we see the ruling party getting into a majority, at least in Bengal, then perhaps you might get a small rally in the market, which could be a good rally for people to encash or take some profits off the table. Right, that's the absolute immediate view. For a quarter, honestly, I don't think so any much changing, whether globally or in India. In fact, the impact of the energy prices will start trickling on to consumers and to you and me now. Post the elections, my sense is that the prices of oil, LPG, everything will go up, because the government has been holding on the lid for a pretty long while now, and it's not possible that globally everything is going up in terms of energy prices and India stands alone without any impact. Right, so I think those things will trigger off, which will have a serious impact on inflation. Monsoon doesn't look pretty well this year. There is a extreme heat wave in the country, right? So the macros aren't looking pretty rosy. So from a quarters perspective, I don't see any meaningful move in the market. I don't see it breaking also below 22,000, which to me is a very strong and a stiff resistance. And making a new high is absolutely not the call right now. From a year's perspective, yes, I think earnings will take precedence. My sense is, even if Nifty were to deliver around a 10% earnings growth, we should see market giving that from these levels, but that's not significant enough. But yeah, I think that's pretty much what we can expect from markets for this financial year.
All right, so expect the unexpected, expect uncertainty to continue, and of course, can't really put a finger on what direction markets are going to take, not just for this quarter, but even for the year. Well, let's leave it at that. Mohit Gang, always a pleasure having you here with us on News9. Thank you so much for your time.